welcome. This is the Market Wrap. I am Agam Nakil. We've seen more weakness and, well, the Nifty has turned for the worse. Right now, down by another 137 points, and it is now below the mark of 11,400. 11,378 to be precise. That's where we've seen the closing for the Nifty. We do have a few gainers today, and we do have BPCL, HPCL advancing by over 2%. But other than that, none of the other gainers have gained over 1%. We do have some advances for Eicher Motors and Tech Mahindra, and not too much to speak for otherwise. Bharti Infratel, well, continues to bear down. We have Sun Pharmaceuticals or Bajaj Finance for that matter now moving downwards as well. HDFC, Tata Motors as well as Bajaj Finserv all declining in today's day of trade. And it's not a surprise that your market breadth on the NSE 500 is also inclined towards those which are, well, dropping. So we do have about 3 losers for just about 2 gainers. Ashoka Buildcon right at the top of the losing list, down around 5.4%. AKMI Software down 5%. Quality, Ratan India Power, Bombay Rayon, Reddington India. Info Edge is now starting to correct as well. This was holding on about the mark of 1600, but it has now started to wilt, and it's the same for ICICI Prudential as well. On the gaining end, it is essentially going to be the sugar stocks, and as you can see, the top 2 on the NSE 500 are from that sector. Bajaj Hindustan and Sri Renuka Sugars. Do remember, these are, well, relatively low price stocks, which is why we're seeing such a sharp up move in all these counters. ILNFS Transportation, Avanti Feed, Suzlon Energy and Navbharat among some others which are advancing in trade. But let's bring in our markets editor Neeraj Shah to get a perspective here. Neeraj, a few days of weakness. Any signs of well, a stop, or we can't really say it's too early to read that, too early to read into that?
I would guess so. I mean, you actually summed up almost everything, Agam, but yeah, a couple of points that stood to my mind. Today we were speaking to a guest from Allianz, Global Investors as well, and his opinion too was that while in the long term all looks okay, for the short term there are some pressure points that we're looking at. And consistently, while we were talking about inflation, he was consistently referring to the election season in India. Yes. That probably sums up how everybody's thinking right now, that until November or December, while this is out of the way, volatility is the name of the game, and therefore firm upsides might be a problem. Any which ways at these valuations, firm upsides would be a problem.
That's right.
But with the impending event, maybe people want to take some, some feet off the pedal, and it's evident in a bunch of names. I mean, HDFC Life would not correct 25-26% purely because Amitabh Chaudhary is out. Right. There are other reasons for this. ICICI Pru, you were talking about it. That's at 362 or 363, arguably one of the cheaper names out there. Right. So a lot of heavy price names are correcting. Not for their own fault, but maybe for the market mood as well. Today, Europe and Asia was very bad. Europe, while it started off just flattish, the selling exaggerated during the close of our markets, and maybe that it kind of had some bearing on our markets too. But, well, it seems like some pressure points right now. The calls were on the short side from most experts today, including the Nifty IT. So you know which way the wind is blowing, at least for the time being. Right. Neeraj, thank you for joining us and giving us this perspective. And speaking of calls, what are our technical analysts telling us about the direction of the Nifty? This is what they're saying. Listen in.
As of now, 11.8 is far away, but 11.8 seems sacrosanct. The UI interest from the beginning of the month seems to suggest that it looks to be unsurmountable, this series. I think 11.600 is the next point, but frankly speaking, we seem to be swinging in a yo-yo. I would be unduly worried only if we crack 11.2 and slip downwards. I don't think that looks like happening in a hurry. So we're going to remain in this range between 11,200 and 11,600. Only if we sustain about 11.6, I think we'd see a pleasant, unexpected surprise on the upside.
There is a possibility that from downside we can see levels of around 11,350, 11,300 as a immediate target on Nifty. And on higher side, it has resistance at around 11,450, 470 levels. So till the time these levels are not taken away, it's better to be on sell side in Nifty. Once the resistance is taken away, we should be on buy side, because once the resistance is taken away, we will see move till 11,550, 11,600 levels.
There was a pocket today which is bucking the trend, and we did see more gains for the sugar stocks. We have Yash Upadhyay joining us to give us an update on the same as well. Yash, more up move and more upside for a lot of these sugar stocks.
Right, so these sugar stocks over the last 3-4 sessions have been doing fairly well. So something like Balrampur Chini, Triveni Engineering or Sri Renuka for that matter, all gaining in excess of 40% in just the last 3 trading sessions. Now what has been the reason for this is the government's announcement of increasing the price for ethanol. So the maximum increase coming in for ethanol derived out of cane juice, which has been increased by as much as 25% to 59 rupees per litre as against 47.5 rupees earlier. And for the B heavy molasses, wherein the prices have increased by about 10% to 52 rupees per litre as against 47.5 rupees. Now what this essentially means is that it makes producing ethanol much more viable for these sugar millers. And why is it so? Because typically for 1 litre of ethanol to be produced, it takes about 2 kilos of sugar. So at the current prices, their realization from ethanol that stood at about 23.5 to 24 rupees, for which there were very few takers in the market, and they were making losses as compared to producing sugar, which the industry on an average realizes about 29 rupees per kg. Now with the revised prices, the realization from ethanol that stands at par with sugar at about 29 to 29.5 rupees with the increase. So that is what is something which is a positive, because more cane would be diverted towards the production of ethanol, which would in turn reduce the production of sugar. We are staring at a 35.5 million tons of sugar production for the next sugar season, which starts from October. So that in turn would be a positive when it comes to the prices. We spoke with the management of Sri Renuka, and he expects that sugar production for the immediate term, which is the next sugar season, could fall by about 0.6 to 0.75 million tons, and the sugar prices, which are down by about 18% on a year-on-year basis, that could see some bit of improvement. And in fact, we've seen that in the last 2-3 days, where sugar prices have inched up. So that is a big positive, and this is something which is a long-term move by the government. So most of these sugar millers, they are coming up with more facilities for producing ethanol, so that would be something, the true benefit of which would start coming in over the next couple of sugar seasons.
Okay, Yash, thank you for joining us and giving us those updates. Of course, sugar stocks, as you can see, continue to buzz. And I'd just like to conclude by suggesting, and we're taking you through how the sectors have done in today's day of trade after the Nifty has moved below the mark of 11,400. Among the sectors that stand out for me, the first one is the Nifty FMCG sector. And do remember, we have been talking about the valuations being rich even last week, after we had seen a little bit of a correction coming through, that the likes of Britannia, ITC, including something like a Godrej Consumer, or for that matter HUL, were still at valuations much higher than what we've seen in the previous 4 or 5 years, for that matter. And that's the reason why perhaps we've seen a little bit of an extra correction when it comes to the FMCG sector. And the other sector which has actually been doing well is the IT sector. Well, standing out essentially on the back of a few names, but on the whole, the weakening rupee has come to its advantage, and some of these names have been picking up, but we're seeing a lot of churn in general when it comes to the IT sector. On the whole, however, the market breadth has continued to remain weak, and we're going to have to wait and watch whether or not we do see that recovery as we move into trade this week. But with that, it's a wrap on the markets, but lots more lined up, so stay tuned to Bloomberg Quint.